Okay, everybody, it's me, Gregory Mannarino, and you know what? The market is not in a happy place today. No, right now stock futures are lower. But that's not even the story. It's the 10-year freaking yield. I forgot to mention the date. So today happens to be Wednesday, April 6th, 2022. People, there is so much going on. I'm just sitting here this morning writing stuff down, and I want to cover a lot with you. But let's just go back to this market real quick. Forget the stock market. You know, I always tell you, look at the debt market. Right now, that 10-year yield, well, I'm not going to say yet. It's in, it's not good. Let's put it this way here. We have a rising 10-year yield. It's rising kind of rapidly after the comments yesterday from Brainerd and George. Look, we're just going to keep our eye on the 10-year yield. I always tell you to do this, and I will keep you on top of it, so just don't worry about it. Is it a yellow flag? Maybe. All right, maybe it is a yellow flag here. But we're gonna watch it. All right, there's so many moving parts right now, so we need to keep our eyes on a lot of things, and I'm gonna cover some of that this morning. So on the back of this 10-year yield, which continues to rise after yesterday's spike, I mean that was a pretty big jump yesterday. After the comments from Brainerd about the Federal Reserve unwinding their balance sheet. They're not telling us how they're going to do it because, again, who's going to buy the freaking debt, honestly? And then you got, the other one, the confused one over there, Fed President George, who's explaining that the Fed could raise rates, 50 basis points at the next meeting. And look, I don't see that happening. It's very possible, I guess, but I just don't see it. The market is going to have a fit over that. But anyway, look, we're just going to, once we get closer, we'll have a better understanding of things here. What else is going on, people? Gold is relatively flat. Silver under some pressure. Cryptocurrencies under pressure. Crude oil, WTI sitting at about 104, going much, much higher. You know that. All right, so look, as I started off this video blog, stock futures are lower. The market's not happy. It's not a happy camper today. And there's so many pieces to this. Let's go over some very interesting economic news here. So number one, right off the bat, mortgage demand, are you ready for this, has now fallen 40%. 40% as of late because of this rising rate environment. That is pretty freaking astonishing here. Now, a couple of other pieces of news that I think you need to be aware of here. As we all know, our lovely, illustrious president, and we just love him so much, don't we? Yes, he was calling for an $813 billion military budget. Well, Congress is looking to expand on that. Not only is Congress looking to expand on President Biden's military budget, but this is going on around the world, and this is should be no shock to anyone. We all knew how this would play out, all right? The build-up to the war over there, the war that is now going on, turned out to be, we're talking about mega arms deals going on all over the world, surging military budgets. It really looks like the world right now is clearly in an arms race, which we all expected would happen. I covered that here in this blog. And then a few other things are going on here. We have the Pentagon talking about moving more troops into Eastern Europe. There's a lot of troop movements going on all around the world. The world really could be positioning itself for another major war. The war with Russia is expanding, just as you and I have expected it to. It's going to be prolonged. It's going to be expanded. It's going to be prolonged. We're hearing about even more sanctions, which were supposed to take effect Today, what is that going to do? Well, right off the bat, two things are going to occur. Higher energy prices, higher food prices. Yeah, right here in the United States. And then we heard from Janet Yellen, the thing, whatever she is, from the Treasury. And she's warning, also sounding a lot like Jamie Dimon yesterday. Oh yeah, there's going to be unintended consequences here for the United States. Duh. People, this is all being orchestrated. All of it. And as I've explained forever, if you're a member of the middle class especially, you are done. You are toast. And the war is on you. The war is really against you. And it's been going on for a very, very long time. Anyway, let us move forward here. I already covered a lot of stuff with you. Anyway, look, people, the situation is what it is, and it's pretty simple to understand. The whole world is a stage. You know that, and it's more like a chessboard, and pieces are being moved all over the place, and it's full of distractions, deceptions, and propaganda. And our job is to look through it all. What do we know is going to continue, people? Central banks are going to continue to inflate. I don't know another way to put this. And that is going to make everyone's life very, very difficult, especially with this war. And if you notice, you're hearing more talk from everybody. They're all pointing their finger over Russia-Ukraine. Russia-Ukraine. Nothing against central banks who are inflating on a pace that we've never seen before, deliberately going out of their way to create inflation by ballooning the money supply, ballooning their balance sheets, especially the Fed. The U.S. dollar remains the world reserve currency. And it's not going to stop. You're going to hear even more calls louder for more cash to be thrown at the crisis or the war. More weapons, more money. It's all a mechanism to keep the system going. People, at its core, you know how this works. The debt-based economic model must be fueled. Without relentlessly pulling cash from the future, creating reasons, any reason, to borrow cash into existence, this whole thing implodes. It implodes overnight in a nanosecond. That's really the truth. So you're going to hear all the talk about, quantitative tightening and how the Fed's going to be fighting inflation and they're going to be doing this and doing that, while at the same time creating reasons like expanding wars and military budgets and funneling cash to whoever they got to funnel it to. It offsets the situation, but the truth of the matter is the Fed's not going to stop either. We're going to continue to see the Fed inflate. I don't care what they say. Their goal is to continue to inflate. That's how central banks keep their power, by inflating, and they will continue to do so. I've already explained to everyone here from many years ago, the Achilles heel of central banks is one thing: their ability to issue debt. If we had a real leader, which we don't, we clearly don't have one now. We clearly did not have one under Trump or the one before him or anybody else. All they're doing is calling on their central banks, and every one of these presidents have done that, call them to inflate, and then inflate some more. Trump wanted negative rates. Trump wanted a weaker dollar. How would that have helped anything? No, it would have made things worse for you right now than they are. Look, I think you understand the situation here. You're under attack, and the war is on you. It's not against Ukraine. It's on you. And you haven't seen anything yet with regard to energy prices and shortages, and they have a scapegoat. It's Russia. They're going to blame everything on Russia. It has nothing to do with central banks who have been printing cash out of thin air on an epic scale. It just keeps getting greater and greater since the last meltdown. And they're going to continue to create reasons, expand wars, military budgets, and throw cash at whoever they have to throw it at to make sure the mechanism keeps going. So what do you want to do? What do you want to do about it? You got to take the opposite side of that trade, people. Let them play their games with precious metals. You know that. We're going to play ours. We're going to bet against the debt, become our own central bank, and I still believe you need crypto in your portfolio. At the same time, with regard to the market, okay, until we see, and we're seeing some interesting action here in the debt market, we're going to remain steadfast. Okay, we're not going to change anything that we're doing. But again, keeping our eyes on that 10-year yield is key. Key, freaking key. And I will keep you on top of that, I promise. All right, people, look, that's it. Very important video. Lots of stuff going on here. I want to hear from you. What do you think? And I will read the comments. I'll see you later. I'm out of here.